Alright, going over the SPX here, we can see all the fibs already drawn on the chart. I wanted to save a little bit of time. Today we came down and we tested into this longer term 23.6. We hadn't tested it since we broke over on the 16th. We came down, came into range, and bounced pretty hard off of it. We recrossed over the shorter term 38.2 at 1914 and continued up into backtest the 38.2 here at 1934. The question now is, are we going to break over this 1934, and are we going to attempt this triple top and see if we can't break 1945, or do we set a lower high here at 1934 and come back to see if 1914 is support? There are a couple things that I find interesting right now in relation to where we're at. I want to swing over to the ES real quick to show you a volume build out that I've been looking at. And if we take it to the 3-year, we can see what's happened here is that in between 1955 and say 2004 or so, somewhere in that general range, there's a huge null, obviously over almost a 50 to 60 point null in volume right there. There's a little bit of build out, but not too much in relation to the node that is under it and above it. We can see that here in this grouping of volume under and beside price right now, the second high volume node on the 3-year chart is developing right about 1916. So that'll be an interesting price to watch now that volume has built out so far. Will it catch it, or does it reject? And if it does reject underneath that 1916 price, can it break back through? So that'll definitely be an interesting thing to watch as far as volume is concerned. If we jump back over to the SPX, something else that I've been kind of watching, come back down into the 1-year, and okay. The other thing I've been watching is this development of what appears to be a head and shoulders pattern, though it doesn't quite fit the criteria. The criteria for a head and shoulders says that the shoulders should be of equal height. In this regard that I'm watching, we would do something like this being the left shoulder, this being the head, and then we have a build out again, but it's lower than that of the right shoulder. So if you do look at this pattern, and the pattern can still be correct, but we would need a test back up here into the 77 range where all this resistance was. But it is something that I've been watching just to see how it does play out. One could also maybe strike something like this to find the bottom of the channel. With it touching there, we could do a redraw as channel. And as long as we negate the spike here, you can see that it channels pretty well. Let me clear that up for you real quick. You can see that it channels pretty well with both the rejection here on the left shoulder and then the 1, 2, 3 touches over here on the right shoulder. Again, though, the pattern isn't a pattern until it breaks down and out. So if this was to break up and avoided that, then it would no longer be the pattern, though we do have a spike out of the channel on the left side, and they tend to be fairly equal, so I wouldn't be shocked to see a spike out on the right side as well, and then it pull back down. The important thing to maintain the pattern would be the close would need to be below the channel. On a shorter term, if we do manage to break the 1934, we're looking to come back here and test this triple top at 1946 or so. And then again, back up into the 1972, 1977 area where the next set of fibs are. And that also would play into that volume node, or volume null that we discussed on the ES. One other thing that I've been watching here, and I put it in the write-up I did the other day, is the pattern that is developing here on the technology sector. So let me just pull this back. And I'll take the volume study off. And here we can see the development of another head and shoulders pattern, this one with equal height shoulders, rejecting the 23.6 on the shoulder line, and then the neckline would be down here at the 50 or so, which is also the long-term 50 on this 20-year chart. A breakdown of this pattern, you're looking at the 44.65, and we'll call the neckline 38, 74%. So you're looking at a breakdown of almost $5 out of this pattern. So if this longer term 50 here in the pink was to break off, you'd be looking at maybe a target down into the 33s. Obviously you have support here at the 36.8 and then 36.41 here. Then on down you've got the 76.4. The final target I would assume out of this pattern break, if we did break the 38 range, would be down here in this 31-32 area with these two longer term fibs. The other thing I've been watching is the IWM. As far as volume's concerned, it's certainly one of the weaker ones. Put it on a 20-year. You can see that the IWM, more so than the ES, has a very large area in which price ran through quickly, and it created quite a volume null here. You have a very prominent HV in here in the 80 area, and then you have the smaller spike that was created on the run up here within the 110s to 115 range. But in between there's almost really no volume at all. And so what we're seeing here as price passed underneath this top node is that price quickly moved through. We went from 110 and we broke all the way down into 93 within 2 months. So the question now is, does the IWM come back up and test the backside of this volume? Does it, let me change this color real quick. Does it come back up here, and does it back test this 23.6 here at 106? As it's never really tested it after the breakdown, and most major fibs come back for a back test. So does it climb over this 102.47 and it doesn't make that extra $4 hike up here and to test the 106s? And if it does test into the 106s, does it break up into this volume here, the smaller node up here into the 115s, or does it test back into volume and does it fail? And when it fails, does it come all the way back down here into the 86, 87 range where the volume is and the shorter term 61.8 is? It could even come down as far as the 87 or 80-70 area where the long-term 50 is, as we see the HVN on this longer-term chart sits right about 79. So this will certainly be one of the indicators I'll be watching. Can price be accepted over 106.25 on the IWM, or does price reject this, and then do we see another leg down, 1, 2, 3, the bounce would be 4, and then your final leg down into 5. So certainly an area of interest for a longer term position. Last thing I'll look at is crude. We can put crude on crude is on a 20-year chart. Crude's on a 20-year chart, and as I said before, I wanted to see it come down, and I wanted to see it test into this volume area here, into the 26 to 30 range, and it did, and it's bouncing right now. The question now is, does it continue to bounce, or do we see a rejection lower? Let's go 1 year, and we will take off this one. Pattern-wise, you can still see that we're maintaining a pretty steep downtrend. Hey, now. There you go. You can see that we're still maintaining a downtrend. This 31 area was the top of that volume area that we were discussing earlier. The pattern is set up as a head and shoulders pattern for now, or an inverse head and shoulders pattern for now. You can see the establishment of a head, and then it's a descending neckline with a flat here against volume pretty much at 31. So we'll have to be watching to see, does crude break out of this pattern higher, or does it turn down a little bit lower? In regards to Fibonacci retracements, one can see, if one puts the shortest term on, we can see that We bounced the 61.8 on this comeback, and we are now sitting comfortably above the 38.2 in this range. I'd look for 32.78 to get tested. That's probably right about where the downtrend will be. When it reaches that point, it might even breach over that 23.6 at 32.78 and test that downtrend. If it does reject, then most likely you'll see an inverted tail hammer here off the trend line and then down past this 32.78. If it does break over again, then we are looking for that retest of the 34.21 range. If 31.9 breaks down, we'll see another test here into volume and at this 50. So far the 50's held 1, 2, 3, 4 times really. So for a bullish nature, you want to see 31.9 hold and a test higher. If you're trying to be a bear in the situation, I would look for a 31.18 break, and under that, then you've got the trend line here, right about 30.62, and the 61.8's at 30.48. So to be safe, you'd most likely not want to be really short crude until a breakdown under the 30.50 range. So in closing, we're going to need to be watching price pretty carefully here on the ES. If we can get about 20 points higher and break into that null, we could see price move quite quickly into this 2000 range. If we can't get that spike and that test up into the 2000 range, we'll be looking for failure and then the completion of this this head and shoulder pattern that has started to develop here. Though skewed to the downside, I still think it completes as a full pattern. So it'll be interesting to see how this market goes. Personally, I think there are too many bears right now. A lot of people I see on Twitter and they're talking about how we have to pull back now. So I think maybe one more spook to the upside just to sketch them all out, and then we can come back down through this price again. The 1914, 1915 range here with all this volume is certainly going to be a tell. If we do break down past that and we can't recover it, then I would definitely start to position for more of a downside play.